On January 14th, 2026, the United States Mint did something it has almost never done in its 234-year history. It completely suspended sales of silver products, not delayed them, not rationed them, suspended them entirely. And if you think that's just some bureaucratic hiccup, let me show you what happened next. The Royal Mint in the United Kingdom sold out. Every single silver product gone. Then the Perth Mint in Australia, temporary pause on all new silver bullion orders. Then major U.S. dealers, Money Metals, SD Bullion, JM Bullion, APMEX, inventory vanished or emergency purchase limits imposed. This wasn't one mint having a bad day. This was a coordinated collapse of the physical silver supply chain happening simultaneously across multiple continents. And if you're holding paper silver right now, if you think you own silver through an ETF or a futures contract, what I'm about to show you in the next 15 minutes will change everything you thought you knew about this market. Welcome to the channel. I'm here to show you what's really happening in the financial markets while everyone else is reading headlines. If you're new here, I don't do speculation. I don't do conspiracy theories. I bring you documented facts, data you can verify yourself, and connections the mainstream media refuses to make. Subscribe right now because in the next few weeks, this story is going to explode into public consciousness, and you want to be ahead of that curve, not behind it. And if this video helps you understand what's actually happening, smash that like button so this reaches more people who need to see it. Let me tell you something that doesn't make sense. On January 15th, 2026, silver experienced 3 massive price drops in a single day. Down 15.95%, then down 10.94%, then down 7.78%. Brutal sell-offs that wiped out billions in paper value. Now here's what you need to understand. When those prices dropped, when silver got cheaper, what do you think happened? You'd expect less buying, right? Wrong. India, the world's largest silver importer, bought $6 billion worth in just 4 months. $6 billion. The most aggressive silver purchasing in their recorded history. So let me get this straight. The price crashes. And the largest buyer in the world accelerates their purchases? Something is very wrong. And by the end of this video, you will understand exactly what it is. Now look at this. The U.S. Mint suspends sales on January 14th, citing extreme volatility and rapidly rising silver prices. But here's what they don't tell you. When they reopened sales just days later, they didn't just adjust prices, they increased them by 86%. 86%. Overnight. Let that sink in. The official government mint of the United States of America, an institution that's supposed to provide stability and consistent pricing to the market, had to implement an 86% price increase because they literally could not keep up with the speed of the market. This is the same institution that has access to domestic mining production, strategic reserves, and preferential supply agreements, and they can't keep up. But wait, it gets worse. The Royal Mint website now shows a simple message on every silver product page. Email me when in stock. Not coming soon, not temporarily unavailable. Email me when we have anything. The Perth Mint, which processes more than 90% of Australia's gold and silver production, put out a statement that's absolutely chilling when you read between the lines. They said, "There is no shortage of silver at the Perth Mint. However, the current level of demand means we cannot fulfill new orders quickly enough." Read that again. They have silver, but they physically cannot process orders fast enough to meet demand. This means the backlog of orders is so massive that they had to stop accepting new ones entirely. Let me show you what the smart money is doing while everyone else panics. Every single time silver has had a major price correction in the last 6 months, physical demand has absolutely exploded. I have the data right here. When silver dropped from its January highs near $120 down to the $60, $70 range, India's imports hit record levels. When it corrected again in mid-January, China's Shanghai Exchange saw silver inventories plunge to 10-year lows. 318 tons as of February 9th, down from 349 tons just 3 days earlier. These are not retail investors buying 1-ounce coins. These are nation states. These are industrial buyers. These are entities that understand something the average investor does not. While you were watching the price on your screen go down, they were taking physical delivery. While paper traders were panicking about volatility, sovereign nations were loading containers full of actual metal and shipping it across oceans. This is not conspiracy. This is documented fact that anyone can verify through customs data, exchange inventories, and shipping manifests. Now let me explain how this actually works, because this is the key to understanding everything. The silver market operates on two completely different levels. There's the paper market, the futures exchanges, the ETFs, the contracts, and then there's the physical market, the actual metal, the bars, the coins, the stuff you can hold in your hand. For years, these two markets have been connected. When paper prices went up, physical prices followed. When paper went down, physical followed. That connection is breaking right now in real time. Here's why. The paper market is enormous. The silver ETF market alone represents roughly 350 ounces of paper claims for every 1 ounce of physical silver that actually exists in those vaults, 350 to 1. Think about what that means. If just 1 out of every 350 people who think they own silver decides they want actual delivery, the entire system collapses. And that's exactly what's starting to happen. The US Mint pause wasn't about repricing, that's the cover story. It was about the fact that when silver prices started moving this fast, people started demanding physical delivery at unprecedented rates. The Mint couldn't price their products because they didn't know if they'd even have metal to fulfill orders by the time those orders arrived. This is what a supply squeeze looks like in its early stages. I've seen this exact pattern before. In March 1980, the Hunt brothers tried to corner the silver market. They accumulated so much physical silver that the price went from $6 an ounce to over $50 in just a few months. The exchanges literally changed the rules mid-game to stop them, implemented position limits, and crushed the price. But here's the difference. That was two billionaire brothers. What's happening now is dozens of countries, hundreds of industrial users, and millions of retail investors all trying to secure physical silver at the same time. You can't change the rules to stop a global movement. You can't margin call a sovereign nation. You can't force India to sell back $6 billion of silver they just took delivery of. The London Metal Exchange tried to pause nickel trading in 2022 when prices went parabolic. It destroyed confidence in the entire exchange. Billions of dollars in losses, lawsuits still ongoing. If the silver market breaks the same way, if the exchanges are forced to halt trading or settle contracts in cash instead of metal, the implications are catastrophic. Because silver isn't just an investment, it's critical infrastructure. Here's what nobody is talking about. More than 50% of global silver demand right now is industrial. Solar panels, electric vehicles, electronics, defense systems, 5G infrastructure. These technologies cannot function without silver. There is no substitute for its unique properties. When the price of silver goes up, you might complain about your investment. When there's no physical silver available at any price, entire industries shut down. Manufacturing stops. Supply chains freeze. The green energy transition that every government in the world has committed trillions of dollars to, impossible without silver. The military technology that nations depend on for security, impossible without silver. This is why China has been aggressively buying. This is why India is setting import records. This is why you're seeing export restrictions starting to appear. Nations are recognizing that silver is a strategic resource, not just a commodity. And strategic resources get hoarded, they get weaponized, they become geopolitical leverage. Now let's talk about the miners, because this is where it gets really interesting. Silver mining stocks are still trading at valuations that assume silver at $25 an ounce. Even after silver hit $94, even after we've seen this supply crunch develop, the mining sector is priced like nothing has changed. That disconnect cannot last. When investors realize they can't get physical silver, when the mints stay sold out, when premiums on bullion hit 30, 40, 50% above spot price, where do you think that money goes? It floods into the miners, the companies that actually pull silver out of the ground. First Majestic, Hecla, Pan American Silver. These companies are about to experience a re-rating unlike anything we've seen since the gold rush of the 1970s. But here's the really explosive part. As governments prioritize their own needs, as industrial users lock in supply agreements, retail investors are going to be systematically locked out of the physical market. The email me when in stock notices you're seeing now are going to become permanent. Physical silver is going to become unavailable to the general public except at absolutely insane premiums. And when millions of investors realize they can't buy physical, they're going to pile into the only thing left. Mining stocks and silver streaming companies. That wave hasn't even started yet. We're in the calm before the storm. Let me show you how this plays out. Silver hit an all-time high of $129.82 Canadian dollars on January 14th. That's a 25% gain year to date. Massive move. But here's what's important. Silver's market cap jumped to 7.141 trillion Canadian dollars, making it the second largest asset by market cap globally, ahead of Nvidia. Just 1 week earlier, silver was in third place. In 7 days, it overtook one of the world's most valuable technology companies. This isn't normal market behavior. This is the early stage of a parabolic move driven by a fundamental supply-demand imbalance that cannot be fixed in the short term. Now, I know what some of you are thinking right now. This sounds too extreme. This sounds like fear-mongering. Market's correct. Things go back to normal. And you're right to be skeptical. But here's what you need to understand. The fundamentals of the silver market have changed permanently. For decades, above-ground silver inventories, the silver in vaults and warehouses, acted as a buffer. When demand spiked, that inventory got released into the market and stabilized prices. Those inventories are now at multi-decade lows. The buffer is gone. At the same time, industrial demand has structurally increased and is not going away. Solar panel installations are growing exponentially. EV production is ramping up globally. 5G infrastructure requires massive amounts of silver. This demand is not optional. It's not speculative. It's locked in by government mandates and corporate commitments worth trillions of dollars. On the supply side, primary silver mining operations where silver is the main product, has been flat for years. Most silver comes as a byproduct of copper, lead, and zinc mining. When those operations slow down, silver supply drops. And right now, with commodity prices volatile and mining companies cutting capital expenditures, new silver supply is not coming online fast enough to meet demand. This is the perfect storm. Structural demand increase, supply constraints, depleted inventories, and now a retail rush for physical metal that's overwhelming the distribution system. Here's my specific prediction, on the record. Within the next 90 days before May 16, 2026, we will see either comprehensive export restrictions on silver from at least one major producing nation, or we will see a major exchange implement emergency measures to limit physical delivery of silver contracts, possibly both. Screenshot this. Hold me accountable. I believe the stress in the physical market is going to force governments and exchanges to intervene because the alternative is a complete breakdown of price discovery and delivery mechanisms. Now let me tell you what this means for you, because this is where it gets personal. There are three types of people watching this video right now. Type 1, you don't own any silver. You've been watching from the sidelines. You think you'll buy when things calm down. Let me be very clear. Things are not going to calm down. Every week you wait, the premiums get higher, the availability gets worse, and the window of opportunity gets smaller. If you wait until the mainstream media is covering this story wall to wall, you'll be trying to buy at the top while everyone else panics. Type 2, you own paper silver, ETF shares, futures contracts, unallocated accounts. You think you're protected because your account statement shows you own silver. I need you to understand something. When this market breaks, when physical delivery becomes impossible, your paper claims are going to be settled in cash at whatever price the exchange decides is fair. You will not get metal, you will get dollars. And by that point, those dollars will buy far less silver than you thought you owned. This is not speculation. This is what happened in the nickel market. This is what happened in the palladium market. This is what always happens when paper markets diverge from physical reality. Type 3, you already own physical silver. You took delivery. It's in your possession or in allocated storage. Congratulations. You understood the game before most people. But even you need to pay attention right now, because what happens next determines whether you hold, add to your position, or start taking profits. The move we're seeing is not the end. It's the beginning. Which type are you? Because your answer to that question determines your financial outcome over the next year. If I were in your position right now, here's what I would be thinking about very carefully. The cost of being wrong about this is asymmetric. If I'm wrong, if the silver market stabilizes, mints reopen with normal inventory, and prices retreat, what did you lose? You own a physical asset that's been money for 5,000 years. It's not going to zero. You paid a premium, but you have real metal. On the other hand, if I'm right, if this supply squeeze continues and intensifies, if we see the paper market break and physical silver becomes unavailable, what's the cost of not having positioned yourself? Massive, life-changing, the kind of regret that keeps you up at night for years. That asymmetry is what smart money understands. The downside is limited. The upside is extraordinary. This is not about getting rich quick. This is about recognizing a fundamental market dislocation and positioning yourself on the right side of it before the crowd figures it out. I know some of you are sitting there thinking, but the price could still go down. What if I buy and it crashes again? Here's what you need to understand. India doesn't care. When silver dropped 15% in a day, India bought billions of dollars more. China doesn't care. When silver corrected, Shanghai inventories dropped to 10-year lows. These buyers are not trading. They're accumulating. They have a decades-long time horizon, and they understand that controlling physical silver is strategic advantage. If you're worried about catching a falling knife, you're thinking like a trader. The entities that are going to win this game are thinking like nations. Let me leave you with this. Remember what I said at the beginning. On January 14th, multiple mints worldwide suspended silver sales on the same day. This wasn't coordinated. This was independent actors responding to the same fundamental crisis. When you see simultaneous breaks in multiple parts of a supply chain, that's not noise. That's a signal. The system is telling you it can't handle the stress. The question is, are you listening? This is why the US Mint had to suspend sales. This is why the Royal Mint is sold out. This is why India is buying at record levels while the paper price crashes. They know something. They understand that the paper price is increasingly meaningless. What matters is whether you can actually get physical metal. And right now, at the official mints, at the sovereign suppliers, at the institutions that are supposed to be the foundation of the market, you cannot. The doors are closing. The email me when in stock notices are multiplying, and the gap between people who own real silver and people who own paper promises is about to become very, very expensive. If this video opened your eyes to what's actually happening, if you understand now why this moment is different, I need you to do 3 things. Hit that like button right now so this reaches more people. Subscribe to this channel because I'll be tracking this story as it develops, and you want to be updated in real time, not reading about it in the news 3 months from now. And drop the word silver in the comments if you're paying attention to this. I read every single comment. I want to know how many of you are actually seeing what I'm seeing, because when the history books are written about this market dislocation, about the moment the paper-silver market broke and physical metal became the only thing that mattered, I want you to remember that you were here. You were informed. You understood what was happening before the masses figured it out. I'll see you in the next one. Stay sharp.